Good morning, everyone. Welcome back to the Ever4 Mindset Podcast. I'm your host and the founder, Michael Rebella. I'm the president of Ever4 Capital Partners, 20-year-old entrepreneur who chose entrepreneurship over the traditional college path, inspired and driven by my goal to retire my mother, who has since then stepped away from her W-2 recently to go full-time with me with multifamily investing. And I hope to teach more middle Americans just like her that were in the situation that she was to learn about passive multifamily investing and other asset classes to build long-lasting financial freedom. And I have a guest today that knows exactly how to do that, who's been doing this industry for a lot longer than I have. So, Sanjay, thank you so much for joining and thank you for being on the show. How are you, my friend?
I'm doing well. Thanks for inviting me here, Michael, and I hope I'll be able to bring value to your listeners. Whatever I can, I'll definitely share with you.
Absolutely. So actually, I've known Sanjay for a little bit. Him and I are in similar networks in the multifamily industry, and seeing him climb through the ranks with multifamily, like for example, just becoming a sponsor and closing out so many deals, I was like, wow. I've joined several of your webinars and just seeing you and your partners just close deals left and right. I'm like, that's just impressive. But anyways, Sanjay, tell us a little bit about yourself. How did you even get into multifamily? What's your why? And basically, who is Sanjay and why'd you choose multifamily?
Yeah. So, Michael, I moved to the US in 2001, and I was living in India all along. And my parents had already moved over here. My sister had moved over here. I was the only one back in India waiting on my green card. And I'm a pharmacist by education. Got married in '99, and September of '99, and moved to the US in 2001. It was cold over here. I had no job, and it normally takes a while for you to get your social security number, and usually within 2 weeks, but mine took about 3 months, and I don't know why, but it was a perfect recipe for me to make babies, and that's where it was. My wife gets pregnant, and I need to go look for a job. Obviously, my physical green card comes in. I apply for Social Security, and I go looking for a pharmacist job, just to be turned down because I don't have a license over here, and which would also take me to go back to school, which was not an option for me at that time. Evidently, I got to get a job at on the floor job at $7.25 and 50 cents in shift premium at a battery company over here that manufactured lithium batteries for space, defense, and industrial applications. I took whatever I got at that given point of time, and I started running with it. And later on, 9/11 happens, and I take a job as a maintenance helper, and then because it was paying a little bit more, then got into maintenance, full-time maintenance mechanics job, and there was an opening for a production supervisor. So I, even though I was doing 90 hours of overtime to make my ends meet, the maximum I made was $54,000 at that time. And when they hired me as the supervisor, they gave me $45,000, but I still took it because for me it was like getting into the management side of things. With that, there was an opportunity for me to get into sales. Became the sales rep for Northeastern region, and then there was, I did a pretty good job, and so they made me the, sales manager for North America, then the director of sales for Americas and Asia, then vice president of sales and marketing. So over the period as I was growing, I was also making more money and didn't know what to do with that money. So a lot of them said invest in real estate. So I started buying some single family homes, and that's pretty much how I got into the real estate side of the thing. Even though I had these, I never used to handle it by myself, because I was always traveling. I was never home. So ended up becoming where something would break down. My wife would have to call someone to fix it, and they would charge me an arm and a leg. So whatever money I would make would be gone, right?
Right.
So ended up becoming where one day I was flying and I saw someone on a YouTube talking about self-directed IRA. That kind of got my curiosity, and I called this guy. He happened to tell me, what self-directed IRA is about, and I said, "Oh yeah, I understand that part of it, but where am I going to put this money?" He said, "Have you heard of multifamily?" I said, "What is that?" He's like, "Well, you see these multifamily apartment buildings?" I said, "Oh yeah, okay, I've seen that. So how do you think they buy it?" I said, "I don't know. Must be someone is very, very wealthy." And they said, "No, it's called syndication." I said, "Oh, okay." What do they do? They said, well, they get investors like you to invest your money in it. And with this self-directed IRA, you could do that. I said, oh, okay. And then he said, have you heard of self-storage? I said, yeah. He said, how do you think? I said, yeah, syndication, right? So he's like, yep. So that's pretty much where I got to learn about syndication for the first time. And I invested money passively. And then later on, I would see the, mailbox money coming in. I was happy with it. Then ended up becoming where in around 2016 timeframe, my son who was in high school got into an accident, and I was back in Japan at that time trying to meet a customer. So if you see my history right from the time he was born all the way, I was just working hard throughout, and I never had time for my family at all. There were times I had missed my wedding anniversaries because it would come right on time during the budget season for my company and so on, right? So it was not a very happy kind of a situation from that perspective as a father not being there for the son. So that was the time when I wanted to do something on my own, but I just didn't know what I'm going to do on my own. Um, Ended up becoming where the first thing to an Indian that comes is liquor stores. That's what we do. But I'm in North Carolina; they're all state-owned, so I that was out of the question. The next best thing that Indians do is 7-Elevens, and that was the next thing that I could think of. But my friend kind of said, Sanjay, this is not for you. Don't do it. And so I said, okay, I trust you when you tell me that that's not for me. I'll listen to you. So I let go of that as well. Just around that time, around 20, like while I was exploring other things, I even tried looking if it is in another state that I could go and buy something. But come 2019, that's when Ari Mentor had come down to Charlotte, and I happened to go there. I'm a numbers guy. I used to manage a P&L of $300 million of a $1 billion company. And so I was like, and I also had done some passive investments. So I kind of understood what they were trying to do. And when they talked about it, how it is done, I kind of said, okay, I'm signing up for the boot camp. And I signed up for the boot camp. And right after that, I went to the boot camp. I realized that they teach you just enough where you can get dangerous, where you're going to get yourself in trouble. So I signed up for their mentorship program. And that's pretty much how I got into multifamily. So
Oh,
it was, one thing I like about multifamily is that it is a team sport, right? So I happened to meet with a great gentleman called Jim Stewart over there. And, Jim was on the sponsor panel at that time. And I was like, uh, listening to him because right then that's when COVID had hit, and we couldn't meet in person. So we were just seeing everything was on Zoom at that time. So if he was in Canada, I was right here. I sent him a message. He said, hey Sanjay, can you let's get on a call. I get on a call, and that call was amazing. And he said, Sanjay, what's the value you bring to me? And I told him what I was going to bring to the table. And that's pretty much how that relationship started. Now, mind you, I do have to tell you this, that the first offer that happened, when he told me, I said to him, I don't know, man, you're putting me in a spot, right? So I really didn't know what to tell him. But I was like, I would be good at raising capital was my thing, because that's what I was trained to do while in my W-2 job before. So, but then I said, well, let me think about it. And then there's another opportunity came, which was a smaller raise, not much. And they said, no pressure on that. So I said, let me try that first before I tell him anything. And I recognized very quickly that I was able to raise $0, because all that friends and families that when you go to this mentorship program that you call and ask, hey, I'm getting into this business. Are you going to invest money with us? And everybody says yes. And yeah, you feel good that, okay, you might be able to raise $500,000 to $1 million. Yeah, that money doesn't show up. But, and a lot of them pretty much, that's one of the best ways to get rid of your friends and relatives. Ask them for money. So
that's true.
that was disappointing for me with my first one. So I put my own money in it. Um, Ended up becoming where one of the GPs on that particular deal was not very happy with the rest of the GPs because she felt like she got the short end of the stick. So I kind of took that as an opportunity to say, hey, um, how much do you want for your GP share? And she didn't know how much. I asked the rest of them, what is it worth? They're like, at this given point of time, nothing. But what would it be later? Could be something. So, so I kind of made an offer to her. She took it. She wanted out. So that is how I got my first GP share, honestly. And later on, that also taught me two things. I said, number one, I was like, why was I not able to raise capital? Was the question. So me being in sales and marketing all along, I started using best practices and so on, trying to understand where I was going wrong. And one of the things I did recognize is that people might think that, oh, Sanjay was a great sales vice president of sales and marketing. He grew the business dramatically, but what does he know about real estate? What does he know about this business? Right? Like, are we going to just put our hard-earned money into this? Because previously it was the company's money. Now it is their hard-earned money.
Right.
So that I can completely understand. So I said, okay, I think I need to become the subject matter expert and show them that, I know what I'm talking about. And for that, you have to create a brand. And so that is when I hired a professional marketing agency to start doing things for me. And I started doing podcasts. I did selective podcasts as well because I didn't want to go to the masses. I wanted to stay focused only on high net worth individuals such as doctors and software engineers. So that is where I started, getting my focus into, which evidently also happened to where I met my now partner, Dr. Jeanette Bonbach, which is why we have most of our investors also are doctors in the space. So that's pretty much how it all happened. And I felt confident. I went and told Jim, yeah, you have something. I'm good now. And he and I closed on the first deal. After that, we closed almost 6 deals. So, you know, right now
Wow.
I have approximately 12 deals and 1,000 doors, a 586 unit self storage, and that's pretty much good. I think God has been good to me.
Definitely. And you know what? There's so much to unpack there. And I'd love to start at the beginning where, when you came to the United States and when you started the family, that's the one thing where you go, okay, I gotta get money. What do I do? And you started to just hustle. You were on the grind, but you also realized, like, I want to provide for my family, but I'm not spending time with the family. And I think that's hugely important because I run into a lot of investors and active partners, especially W-2 employees. They're like, I'm trying to do this multifamily thing, and I'm also trying to do my job, spend time with my family, but I'm not. I'm like, that's interesting. And you were able to climb the ranks, get into management positions, and then go into marketing and sales. And that kind of segues into the next question that I have. So when someone is starting out as like a brand new capital raiser, such as yourself, there's one thing to add on again is that what you did was very important that I'd like to definitely dive deeper on is you took your sales and marketing skills, white labeled them pretty much, and applied them to multifamily because it's all the same skill set. Like, for example, if you're looking at numbers and, general ledgers, P&Ls, sounds like underwriting and asset management to me. So how important is it when you want to raise capital? Of course, skin your knees every once in a while, but how important is it to refine those marketing and sales skills before you take on the full-time position as a capital raiser? Because there's a lot of new capital raisers in the industry and they're like, all right, I'm going to go raise capital. Do you even know how to raise capital? Do you know who you're talking to? Like, are you talking to the public or are you talking to that niche market like you did? So I guess what I'm getting at is how important is it to have at least some sort of a concrete baseline of sales and marketing before you start capital raising?
Well, the thing is, see, the way I look at it is this: having a good understanding about the numbers is the key. Okay, because
100%.
you know, because if you don't know what to ask an underwriter, every deal is a great deal.
Yep. Seen plenty of those.
Right? So that is the first thing, because um, if you don't know where the numbers are coming from, you are just regurgitating what the underwriter has told you. So you need to be good at that part of it. You may not have to, that might not be of interest to you, because you like to do capital raise, but you have to know what it is. So that's number one part. Number two, know your operator, because you might have a great deal, but if you have a lousy operator, your underwriting doesn't mean, you know, it doesn't mean anything. So it's all just thrown out of the window after that. So understand who you're partnering with when it comes down to the operation side of things. Now, as far as sales and marketing is concerned, um, well, you're selling yourself every day. As a child, you became, humans have always been salespeople. Since childhood, we've been salespeople, right? We used to please our parents so that we could get a candy, right? Or
Absolutely.
get good grades, because the atta boy, here you go, buddy, something, right? When you got into a job, you started doing great for your thing, because it's going to give you that increment, or the next raise, or whatever that is. So by nature, we are all salespeople. Marketing, on the other side, is a total different beast. Okay.
100%.
So I've seen a lot of people get confused between sales and marketing. They say, oh, it's the same. No, it's not the same. It's a very
Mhm.
different thing altogether. So for that, you have to either be experienced in it, or you need to go with someone who has experience. Like, for example, the first thing, even though I was experienced as a marketing person, I realized the quality of job that was getting thrown out was not good enough. Like, for example, I used to use Fiverr. I used to use, someone to write the copyright and things like that. And it doesn't come out right, because it's not you. They don't understand you. They don't understand what you're trying to achieve. Now you're taking a substandard product because you want to put something up on the product. And now you're trying to do a whole lot of things by yourself, at which time the quality just goes down and down and down. Now you outsource that very same thing to a professional company. You have like 5 or 6 people doing the job for you, and it's totally worth it. So if you like, yeah, uh, obviously, do they ask you for your input and all the things? Do you get on a weekly call and do you do that? Absolutely. But they are the ones who are the experts. So sometimes, I always believe, like Bill Gates says, right? Like, hire the right kind of people and let them do their job. So,
Absolutely.
so that's something that I always do. And that's, I don't know if I answered your question. It was probably a long
Absolutely.
answer for a short question. I don't know.
No, it was perfectly said. And you're right. There's people that think, like, in the beginning, I thought, okay, marketing and sales, it's the same thing. I can just sell myself online. No, it's a completely different beast. Like with marketing, you have to figure out what hashtags to use. How do you do this? How do you do that in order to actually get to the sales portion? And it's like this massive funnel that nobody talks about. And I'm like, my gosh, I don't know much about this. And you had to sit down and deep dive to go, okay, well, I need the expert here. And in the beginning, there's a lot of people that want to do everything. They want to do everything. Well, no, we all have weaknesses, we all have strengths. And I always say, find people who have your strengths or have your weaknesses as their strengths, and that creates equilibrium. It creates the
Yep.
team. Like you said earlier, multifamily is a team sport. You
Yep.
can't do the asset management, underwriting, capital raising, and everything else in between all on your own. I mean, you're asking for trouble, or
Yep.
either that burnout on day one. Because it's one thing to learn multifamily, it's one thing to actually do it. It's a completely different beast.
Absolutely.
Yeah. And I guess that segues into my next question. What was the most, besides capital raising and not doing so great on the first raise, what was the most difficult part for getting into your first deal?
Building um, broker relations. you know it takes time. First of all, first I used to just go after anything and everything, like a chicken's head cut off. I, I
Right.
remember, without figuring out, like, anything that sounded good, I would just go after it. And I was like, okay, yeah, they have said these are the greatest markets, you got to go after it, and things like that. um, and then the next thing you see is none of the numbers are adding up, because obviously you're being super conservative about it, or the deal itself is not a great deal to begin with, right? So now you're writing, you're getting frustrated about it. Then later on, I very quickly realized I'm going and reaching out to multiple people. It doesn't take you 10 brokers to make you rich. It takes you one or two brokers to make you rich, right? So then I learned, I said, okay, instead of me just being like going with a shotgun approach, let me do the same approach that I did when it came down to reaching out to investors, right? So what I did was I kind of started looking at it from perspective of identify a region and identify why you want to go after that region, know everything and everything about that region, and now go after those two topmost brokers in that area, build that relationship with them, meet with them, wine them, dine them, send them a bottle of wine after your meeting, make them feel good, right? Go
Or a
again.
bottle of scotch,
Pardon me?
or a bottle of scotch if needed.
Or a bottle of scotch if needed, right?
Yep.
And then just stay connected with them and go after every 3 weeks consistently, work on every opportunity that they have, and keep telling them why this is not panning out for you, why it's not working out for you, right? So once you do that part of it, now you've started building the relationship, and he feels confident. Then also talk about who your partners are, like, hey, Jim, this person, like, he's got so many doors, he's done this, he's my sponsor, he's going to take care of this one for us, like, get him on the call if need be, right? So those kind of things, that kind of helps a long way. And that's pretty much what I would say. Is it is difficult, but a lot of people, just don't identify that side of things, and they run after anything and everything, because people become desperate. Because there comes a time in this business, which I myself went through, because I was just writing a whole bunch of underwriting. I was doing a lot of underwriting, sending out, every single thing that they said. Send out postcards, send out this, go to foreclosure places, see if that is available. All kinds of, go to the courthouse. I'm like, okay, I'm trying doing all these things, and now you're seeing a whole bunch of people saying, "Oh, I closed on this deal." And I'm thinking in my head, I'm like, what am I doing wrong? Where am I going wrong? It's very
Right.
disappointing, right? So then I slowly realized that, okay, don't go after what people are saying or doing. You know, just calm down, get relaxed, take a breather, and strategize, and put a structure together as to what you want to really do, and then things starts falling in place.
Absolutely. And there's something that you said there. It only takes either one or two. And you're right, because I'm guilty of the same thing. I did a shotgun approach. I mean, there was no barrel, there's just mess. It was like, could I just maybe land a solid broker? But I realized that, wait, they actually don't know what I do. In fact, I had dinner with a broker. I was whining and dining him, and I'm like, we do multifamily syndications. And he goes, what? I'm like, that's what we do when we call you. And he's like, I have no idea what that is. And it dawned on me, they have no idea what we do, like what happens after this property sold to us. And I'm like, wow. And it really changed my perspective of how I approach brokers. I cultivate them and develop a relationship with them as I were if I were to talk to an investor. And I was like, maybe that's going to change the game a little bit, because I believe, correct me if I'm wrong, broker relations is very much under talked in the industry, where it's like, find a broker, connect with them, do deals. It's a lot more than that. It's a lot more sophisticated. There's more personality behind it. And that's what I've been seeing. So thank you so much for bringing that up. And there's another thing that I want to talk about is specificity. You've been talking to brokers with specificity, investors with specificity. Like, for example, you go on select podcasts. You do select podcasts because you know who you want to talk to. How important is that when it comes to looking at a market? And we can dive into markets in a second, but just finding the person that you want to align with, because this is the market that you're interested in, meets your team's fundamentals along with what you're looking for. Plus, it's the fact that you're not just doing that shotgun method. You know what you're looking for, you know what they're looking for, along with your investor. So how important is it to stay focused and to find that niche market, even though some people might say, well, I don't know, it's just so small. But at the same time, you could talk to that person. So, long question, but how important is it to stay specific when it comes to broker relations and investor relations?
Well, the thing is, Let's take one at a time. Let's take broker first and then focus on the investor side, right?
Perfect.
Obviously, in real life, you do both at the same time, but
Yep.
just for this conversation, right? So when it comes down to the broker relations, now you have identified what you want to do. You've put in enough time with him. You've also introduced him to your partners, like the sponsors and so on. That has built him a lot of confidence that you are going to close. Because what is the most important thing for a broker? Is this person going to close the deal or not? That's all he
Yep.
cares about. That's why he goes with those so-called pocket listings, because he's going to just give it. Like, I was always thinking, I was like, hey Jim, like, I got a great, he's like, Sanjay, if it was a great deal, I would have had it now, because even before it comes to you, we have it.
Yep.
Right? So I'm like, huh. So that those are the aha moments that kicks in, right? It's like,
Right.
okay, so that is important part. So yeah, and what ends up happening is, once he speaks to you, and he probably would have not known Jim, right? So now he has spoken to Jim, he understands what it is. So but you're the one who's building that relationship with him. So what does he do is, he knows that, okay, this guy is a closer. He'll first give you a deal, you're going to close on the deal. Now he knows, so he's going to tell his colleagues, his friends in a different state, because he's like, yeah, we have a deal over there, why don't you check that out, and so on. So that's how the ball starts rolling. So that's the that's how the things happen in this industry. Now it comes down to investor relations. Obviously, the key to this thing is, be very careful about who you take the money from. I think that's the key. If someone who
Yes.
has got 50,000 is all they have, and don't take money from them. Like, even if they push you for it, say no, because you don't want someone to be in this industry who's going to struggle just in case, if that's the only thing that they got. This industry is, it's not as volatile as stocks and bonds, but it's an investment, and every investment comes with its own challenges. Obviously, the good part about being in this business is that your your risk level is very low, right? It's like, it's not very high risk kind of investment. So that's because you have a brick and mortar building out there.
Right.
So once it's the same thing you're doing with the investor that you did with the broker, which is, now you're going to be introducing him to your operator. You're going to introduce him to the underwriting side of things and show him why this is the thing. At the same time, because you're also doing your marketing side of things, you got to constantly stay in touch with your newsletters. Make sure that your content is sent out on a regular basis, whether it is Meta, whether it is Instagram or Facebook. They also look at how consistently you are sending out these ads. They're also looking at what is the color profile that you're sending out on a regular basis, what kind of content you're putting out on a regular basis. All these things add up. And now you do some paid ads that comes into the play. So it's a mix of things that you're doing, which now gets you the Rolodesk, who are not your friends and family, but people who are actual investors who want to invest. Now, your friends and families, after you've done a couple of deals, will they invest with you? The answer is yes,
Yep.
but it takes time.
Absolutely. And it definitely does take time. I mean, it's a delayed gratification game. I mean, it's not, your get rich quick scheme, which there's some people that think, like, oh, when I get into multifamily, it's gonna be handed to me on a silver platter. You have people that think, oh, this acquisition fee is gonna retire me. No, it won't. It doesn't work like that. And we see it all the time. So it's that long-term play that all of these little cogs will turn this massive wheel. Like, for example, the constant posting. What are you posting? What kind of content are you sharing? And it's all these little things that turn. Like you said, it's what are you doing consistently? And I think that's the biggest thing. It's just staying consistent to the plan. Now I kind of want to shift the subject to kind of your insight onto the multifamily industry. We've been seeing a lot of different things happening. So, like, for example, the markets you're investing in, and at least the projections for the rest of this year, you and your team are still looking for deals. You're looking for different markets to invest in, unless you're staying with the same one. But I guess from a macro perspective for the real estate industry, what are you seeing, I guess, while you're in the trenches with these deals? what's happening with rents, what's happening with insurance, because we're seeing a lot. But what are you seeing from your perspective in the industry?
Well, obviously, the insurance people, they are the biggest, money makers, I would say, because they are the only ones who are making money, right?
That, yeah, right.
so, so they're happy. Yeah. So obviously that is there. With AI coming in, a lot of people losing their jobs. It definitely is hurting a lot of people. So you got to be very careful about the rent increases that you're going to say. All these years, probably it was possible, but now is it still possible? The answer is yes, but it don't expect it to be like 7%, 8%, 10% like it used
You
to
know.
be right before. It's going to be very minimal. But yeah, uh, but then again, the beauty about this one is it's all about what you can get at. It's all about the cost basis, right? What you're going to get this property for, and what you're getting, right? And how you're going to efficiently operate this particular property. And this is exactly where I said where a good operator comes into play, right? So because he knows exactly how to manage this property and still make it profitable. So if going in, a, if you are conservative with your numbers, and b, if you're extremely good at an operation from an operation side of things, it's a game changer for you, because you have no control over the insurance, you have no control over the feds, what's going to happen, but what you do have control over is your operations, you know. So now, will there be a time when it doesn't matter how tight of an operations you might have, because the feds and the insurance could screw up everything? But the possibility is yes. But a good operator will still make it where two things will happen. Number one is that the property will take care of itself, which means your investors' capital preservation is taken care of, and they don't have to worry about, am I going to lose my money part of it, right? So that's the thing. Will there be a little bit of a delay in terms of the cash flow side of things? But is the property appreciating in value? The answer is yes too. So those are the things that you have to look at it from that perspective. I do see that a lot of investors are getting nervous when it comes down to making certain investments. It's because of some of the people, how they mismanaged the property, and how they are
Hmm.
suffering. That also has kind of put a dent into things. But a good investor, a seasoned investor, you know um, knows about this much better than anybody else. So they know how to vet their operators. They also know how to vet the deal. They just don't go with whatever you just tell them. They'll ask you those important questions, and they will invest. So the good investors, seasoned investors, they'll invest no matter what the market is going to be.
Makes sense. And it's also through that education that, for example, that content you provide, and not only that, those newsletters, is you're making them more sophisticated through your deals. And you have a lot of, in fact, I talked to a seasoned operator not that long ago, and he was like, I'm still investing in multifamily. It's not going to go away. It's
Correct.
just a fact of, well, what does your underwriting look like? What does your business plan look like? And what does the team look like? My mother and I have an expression where, you can have a great deal, like an absolutely gold nugget deal, but a mediocre team, which will therefore make it a mediocre deal because it's how you manage it. What's the team doing? Where you have a mediocre deal and then a great team, then that deal's going to be great. And I think that's the one thing that a lot of people, at least just starting out, kind of overlook, where it's like it's actually not the deal. Well, the deal does factor in, but the large percentage of that is the team. The deal's not going to change. The team is. So it's always vetting the operators, vetting the deal, and understanding where everyone's at. That is the biggest thing.
Yeah, and one of the things that everybody needs to understand in this business is that everybody needs a place to stay. Okay. Now
Absolutely.
people might lose their jobs and things like that. They'll definitely bounce back. It'll take a while. But what happens is, that's why I like the B and C class space instead of the A class place, is
Yep.
because you cannot survive the A class. They'll come down to B. The B will go to the C. So it has to work, right? So it's always going to be there, something or the other. Is because one thing that a married couple will always try to do, especially if they have kids, is to create a safe environment, or raise their kids in a in a very safe environment. And they'll, if they have to cut certain things like their lifestyle to a certain extent, they will, but they will not put their kids life in harm's way. That's why they'll, I always bring it to, in a whether, even if they have to downgrade to a B class or a C class, they'll make sure that, is this place safe? So that's the key thing as an operator, to make sure that you're creating an environment where your tenants feel safe to be there, and also give them a community feel where they belong. Like, for example, what we do is, we right now, it's like summer, very soon it's going to be back to school, so we do a back to school kind of an event where we bring kids bags and pencil, color crayons, and all kind erasers and everything, and we let the kids go and just pick it up, and books. So that kind of saves a lot of the money for the parents to put in there, right? Come Easter, we do that Easter thing, basket thing. Come Christmas, we obviously do that as well. And and obviously we also go out and talk to the property manager and ask who's the one who's really going through a difficult time, so that we can make their a really good one for them. And also we do tenant appreciation kind of a thing as well. So all these things kind of gives the tenants that warm and fuzzy feeling that, hey, this is the community I want to live in. So that's the key. And they don't mind paying a little bit more, you know just to stay there.
Absolutely. It's funny that you say that. The first deal I've worked on, it's in Tyler, Texas, with a fabulous team with Cindy Harding, and she's the lead asset manager on that. And her philosophy is complex community, where we're doing, and I'm seeing it with the GP team and the asset management team, they're doing bunches of events, giveaways, basically bringing everyone together. It's just so heartwarming to see. And just to hear you say that too, it reinforces the fact that these are families. I mean, these aren't just, numbers on, a rent roll. These are people with legitimate lives, legitimate families, like, a legitimate future. So it's to provide that safe environment to go, listen, where they can get out of their car and go, you know what, I live here. This is awesome. And I think that's the biggest point. But unfortunately, we're coming to our time. But Sanjay, for the audience out there and for anyone that's looking to get into multifamily real estate, or at least passively or actively, what is one piece of advice that you wish you had when you were first starting out?
Well, I think everyone needs to understand at least the basics of what syndication is and how it works. That's the key, before they get into any of the things, right? Um, Ask questions. Well, for example, I have a book that I've published on my website. If they want to go, I wrote it specifically for those who have zero idea what syndication is about. It starts from what a syndication is about, as to how actually we make money in syndication. So it kind of gives you a good understanding. It's not a big book. It's just a 45-page book. Just covers every single thing, like how we identify markets, how we what we do, what is the what cash on cash is. Like, so a lot of people don't understand what that is, what the jargons that we use, the DD, what is the due diligence, what we do in the due diligence kind of a thing, so that they kind of get a feel for, you know they can, and also ask questions about, hey, so I've read on this particular thing, tell me a little bit more about it. What questions to ask when it comes down to the rent roll, when it comes down to the underwriting side of things as well. So those are the things that they have to kind of get an understanding about. Also, if they want to, they can go to my website for a lot of these webinars that we had done, to educate our investors on. They can do that as well, which kind of would make them ready, is to, whenever they go in front of an operator as a to put in the money, they know what to ask. And if they are being an active operator, or they're trying to be active in the deal, they'll also have an understanding of what kind of questions they're going to get and what to be prepared for.
Absolutely. Beautifully said. And outside of your website, Sanjay, how can people reach out to you to either look to partner with you, invest, or just to reach out?
Yeah, no, as I said, you have my QR code right behind me. I hope it still works.
Yeah, it does.
It should. But then again, yeah, so you can always go to my website, www.bluringinvestors.com. It has my Calendly in there, so they can schedule a call with me at any time. And also, you can take down my number, 828-391-4805. And you can send me a WhatsApp message if you want, or a text message, whatever works for you.
Awesome. Well, ladies and gentlemen, you heard it from the expert himself. So to learn more, please go follow Sanjay. This episode will also have his social media links plus his website included in the description below with this episode. But anyways, unfortunately, we are at our time. Ladies and gentlemen, thank you so much for listening. I hope you got amazing value out of this. Build yourself better and bigger every day. Live better, live bigger. Always move ever forward. Sanjay, thank you so much for providing so much value today. We have unpacked a lot, and I know I got a lot of value out of this, so tons of people will too. So thank you so
No,
much for joining.
it was a pleasure, and I hope your listeners were able to get some value out of this. That's the point of having these podcasts, right? So thank you very
Absolutely.
much. I
Thank you,
appreciate
my
it.
friend.